So, our next panel, because we heard the point of view of a prominent DFI, now up to private investors to come and share their perspective. So please join me on stage. Three fantastic panelists and experts in the field. Please, Paola, Florence, yes, Christine. Welcome, welcome, welcome. Okay. Is the mic working?
Hello. Hello, hello.
Paola, just press that. Works? Okay, cool.
Can you hear us?
Yes.
It works?
Yes.
Yes, okay.
So welcome. I hope that the first discussion inspired you to be even more effective and let's say quick in the deployment of private money into these important projects. So we have approximately a bit more than 20 minutes, so a bit less than what was expected, but that's fine. We'll adapt to cover many points and to cover the diversity of your expertise, your geographies, and your asset class as well. So I will start with a question, just for the audience to understand. I will ask the same question to our three panelists because they're very diverse perspectives, and I believe it would be worthwhile to hear what they have to say, each and every one of them, on a similar topic. So first off, 10 years after the Paris Accords and countless COPs, where private investors made commitments to expand public and private cooperation, we're still lagging behind. That's unfortunately the reality, and especially in low-income countries. Based on your experience, can you tell us what is missing for private investors to step up and follow the lead of DFIs in substantial amounts? What would you need to see more of, or possibly to see less of? Paola.
I will speak from the point of view of a venture capital and private equity fund investor. So this is my limited area, just to set the scene. And I will speak also about investment in emerging markets, because that's the area where I have been active. What is missing, in my point of view, is more leadership from DFIs, more leadership to do exactly what our friend from Proparco was telling us. We need to be more innovative, not only in the instruments and the blending we're using. We need to go for more fragile economies and places where impact is really going to make a change and move the needle. We need to be faster in taking investment decisions, and we really need to set, to attract, be able to catalyze this private investment.
Paola, I love the fierce answer. Can you tell us from where, what is your vantage point?
My vantage point is I work with a lot of first-time fund managers in emerging market, young people who are very, very innovative in trying to find solutions for all the problems that they are facing. And it is extremely difficult for first-time market players, like first-time fund managers, to raise the funds. And usually, the money, the anchor investments, don't come from DFIs. They come from the private sector. What I see is that often the private sector leads the way, and once you have traction from the private sector, the DFIs come in. I have even seen funds where the catalytic layer of first loss was provided by foundations of corporates from the private sector, and then the DFIs came into the senior layer, taking advantage of that first loss.
Thank you, Paola. Florence.
Yes. Hi, everyone. Very happy to be here. So I'm talking from the point of view of a private investor, AXA, an insurance investor. I'm head of responsible investment. for the group, and as a global insurer, AXA has a very long-term focus, so it's very interested in sustainability, resilience, and as such, we have set targets for some years. Our targets to finance climate transition is for 5 billion a year. We also have a target more on the social side, which is to improve community resilience, and the target is over 500 million a year. Last year we did 1.3 billion. And those investments include investment in emerging markets. So we are invested in emerging markets. We have about 30 billion in our balance sheet on emerging markets. And we are open to do more. But what we need is attractive projects that fit our risk return appetite. And oftentimes, as you mentioned, Françoise, there are a mismatch in the risk that we can take and the risk profile of investment in emerging markets, and that's why we need DFIs to step in. And we believe that we can do more, especially with blended finance. We can do more at a better pace and at a bigger scale. And for example, we are in the Insurance Development Forum, and we are part of the Infrastructure Task Force. And in this task force, the idea is to gather insurance investors to follow our risk tolerance and find attractive projects for that, and attractive projects that have an impact for the resilience of communities, so infrastructure, hospital, waste management system, water system, bridges, transportation, and the objective is to replicate those investments. And we use blended finance again, so that's very important, and we expect to mobilize about 1 billion euro in partnership with BlackRock for this initiative. And of course, DFIs are invited to participate in this infrastructure initiative for emerging markets.
Thank you, Florence.
Thank you, Amen. Good morning, everyone. It's a pleasure to be here. My experience has been running an investor network that is actually registered in Singapore but operates globally across 25 cities and scaling rapidly. We're hoping to be in 40 cities by the end of this year. In the network, we have a combination of sovereigns, DFIs, private equity, family offices, angel investors. So we really have a big, broad range of investors that are focused on climate. We're called Investors for Climate. What I feel is missing from my experience and from my point of view is definitely more trust and transparency, not just in the pipeline, but also in the performance. So the DFIs are definitely taking a leadership role, strategic leadership role that help give credibility to early investments. We definitely appreciate, very inspired by the talk of Françoise early on. But for the private community, I feel the bridge is still not there. And I think there's a lack of a couple of things. More opportunities for co-investments, structured co-investments, blended finance. You touched on blended finance. I think the problem there I see from my vantage point, especially with the private investment community, is that we haven't really customized the language to really appeal to their appetite. So when you look at Singapore, for example, I'm sure many of you have been to Singapore. I've been based there for 20 years. Pre-pandemic, we had about 150 family offices based in Singapore. Today, we have almost 2,000 family offices. And so our role with Investors for Climate is to listen really hard about what are these families investing in? How did they make their money? Was it in real estate, shipping, cement? What's in their portfolio? Are they looking for more catalytic opportunities? Are they looking for deep tech technologies to de-risk their assets? So we see that role, and then that's when we bring in the opportunities. We pull in the sovereigns, we pull in the DFIs, we talk to private investors and try to match them with what is missing, and not just in early stage, but in later stages as well.
Thank you, Christine. If you keep the mic, what is one concrete situation where you witnessed a positive cooperation at play between public and private investors, and what lesson can you help us draw from it?
Absolutely. So I have a great example, actually, and I really had front stage row when I saw this happening in Singapore. So Singapore has recently become more of a food tech hub. Those who are familiar with investing in food technologies, and this is drawn particularly because of the insecurity that we've had with the supplying food. Now, many of you have probably been to Singapore, 6 million people on a small island. We import about 90 to 95% of our food. So during the pandemic, that vulnerability was made very apparent. As our borders were tightening, we couldn't get some of the proteins, eggs, chickens from around the region. And I saw happening very fast a shift in public capital being directed to develop this food technology, investing in plant-based, cultivated meat, vertical agriculture, farming, etc. So we were seeing our sovereigns. We have 2 sovereign wealth funds in Singapore, GIC, Temasek, investing heavily in this space. EDB, Economic Development Board of Singapore, was very much a partner in developing this ecosystem. The Singapore Food Agency was doing the research to de-risk these opportunities, and they allowed many more startups in this space to come and set up in Singapore in line with their 30% by 2030 plan of producing as much as 30% in Singapore. The private capital followed very fast. And I saw that myself because I was a consultant with one of the food tech unicorns from San Francisco that was launching cultivated meat. We raised millions and millions of dollars through this opportunity. And the lesson that it taught me is that, and I know it's a small ecosystem,
and
but
it's not a low-income country, but
it's
yes.
not a low-income country. We're a small case study in this sense. But what I saw was that when governments obviously are very clear and create the opportunities for this ecosystem, not just in investing, but storytelling, policy, it can work. It worked in the food tech system, but it could be applied in global climate as well around the world.
Thank you, Christine. Florence.
Yes, maybe I can mention a success story. This is not a new one, but this is a very important one of the IFC MCPP program. This was launched over 10 years ago, and we invested in 2017. NCPP is a program between the World Bank Group, IFC, and private money. And this is a program of managed co-lending portfolio platform. And there were several rounds of this program. We invested in 2017. And now, more than 10 years later, when it started, which was before 2017, over 15 billion euro were mobilized by the IFC, so a very successful program. And I would say the success factors there were that the IFC saw a need that needed to be filled, and they designed the program to appeal private investors, to appeal their risk appetite by using innovative blending finance, and that's again an important point. They also leveraged on their local network to find interesting projects, and they only came to fill the gaps, to pave the way for private money to come in places where they would not have naturally come. So that's an interesting example.
Thank you. Paola.
Yes. The example I will mention is one that I know well. It's Boost Africa. In 2018, we were starting to see from sub-Saharan Africa the first venture capital funds emerging. I'm not talking South Africa, but the other countries of sub-Saharan Africa. And we thought we need to invest in them. I have been working 24 years with the European Investment Bank. I forgot to say it. And so from the European Investment Bank, we said, how can we actually invest in first-time teams in sub-Saharan Africa doing venture capital in very early stage startups? And the important thing of why this project took off is because we said, okay, it takes a village. We need to cooperate among DFIs. So we wrote to all the DFIs, and Africa Development Bank actually answered and said, let's do it. Second thing, within the DFI, my team, we needed to say to the European Investment Bank, let's do very small, very risky, very time-consuming projects. That's all a bank hates. So how do we bring the institution to do this, well, they needed some mitigations. They needed a mitigation in the form of a first loss. So we went to Brussels to the Commission, and that's where we got the first loss. And this first loss, we decided, and this is very important, to put it at the level of the funds so that it would mitigate the risk of all the investors, private sector, DFI, whoever invests in the fund will get a risk mitigation. And the third thing, which was really key to have this whole industry of venture capital take off in sub-Saharan Africa, was that even though we were working only with one other DFIs because the others didn't immediately want to, we were meeting with all the operational people in the DFIs twice a year to report on progress and exchange views. And working together actually attracted them to many funds. And now we have really a collaboration. Boost 2 is taking off. The private sector is investing, and so that's
very clear. I would like to leave some time for the last question, which is a bit tricky, and I would like to leave you enough time to answer it. Some private players expect DFIs to hedge most of their financial risk, and you mentioned the first loss tranches or guarantees, while keeping most of the financial returns. At the same time, there is an increasing pressure coming from public opinion on DFI's budget use, sometimes to require more financial returns or more impact done locally, not far away from the capital holders, or for Proparco, impact done in France, for FMO, impact done in the Netherlands. So although emerging and low-income countries are seen as too risky, hardly investable by many private investors, the certain social and environmental costs of inaction is hard to fathom, including in rich countries. So how do you navigate this equation, impact versus financial return, risky now versus tomorrow certain, here versus there, from your respective vantage points? I know it's a difficult question, but I think it's important that our audience hears what you think about this. Thank you.
Thank you for that question, Imen. It's an important one for sure, and it is a complex answer. I think for us at Investors for Climate, we believe that the sooner we understand that the cost of inaction is greater than the cost of investing in innovation, the better it is. And that's certainly something that we've been focusing on. The risk appetite of our investors, of course, vary greatly, because as I mentioned, it's a very diverse group of investors. But we try, in terms of leadership, I have a co-founder, both her and I are really trying to instill as much as we can the influence that we need to look at the social and environmental impact. I spent 13 years of my career working in philanthropy, so I have that lens. I'm still operating 2 nonprofits in parallel. So in my perfect world, we look at that, that combination when we propose investment opportunities to our syndicate. And actually, the very first one we proposed was exactly that. It was more of a catalytic investment. It was a company called Coast for Sea, one of the Earthshot Prize finalists. It operates in the country where I was born, in the Philippines, working with seaweed farmers. I was very proud to put it forward, but it was not an easy sell. I had many comments like, well, this is not VC returns, but look at the social impact, look at the environmental impact, and ultimately, in a perfect world, we need to look at those values very clearly, because if we don't invest this way longer term, we will pay the cost. I'm completely convinced in it, because I've been working at the grassroots level in philanthropy for so long, and I know it needs more capital. And so we keep passionately advocating for this, really looking to quantify the social impact, the environmental impact, future-proofing. Our world is what we need to focus on. And I always say that, honestly, and this is what I see our role at Investors for Climate is, the best networking that we do together as a community is about making other people more successful. And so we're pushing for that.
Thank you. Florence.
Yes, as you mentioned, Imen, there are important needs that are not covered. Some will have to be covered by public money around public goods, and this cannot be filled by private money, but others, and a big part can be partly funded by private money. But I would say that as private investor, we still need attractive projects, both from a financial and impact perspective. And today we still have a lack of data, lack of track record, lack of regulatory stability in some places, and that's where we expect DFIs to play a more active role, to be, risk taker, to pave the way for private investors. It doesn't mean that we need concessional capital forever, but we need these risk mitigation measures to be able to deploy at scale, to deploy replicable initiatives, and to invest massively and to make emerging markets an investment place for private money.
Thank you, Florence. Paola.
Yes. Well, I have one thing that I think is really important. DFIs and everyone needs to invest in more projects which are women-founded and women-led, because there you're sure you will get impact. At least from my vantage point, that's what I see. Secondly, I will talk to a point that our colleague in Proparco was mentioning, which is true. We need a new asset class for DFIs that is recognized, and that is something along the lines of regenerative finance. We need to see that financial profit is not what we're going after. We're going after regenerating the human and natural capital in the world. And to do this, and then try to move towards financial sustainability, but not start with the profit idea, because then we will end up competing with the private sector instead of leading the way towards more impact. And there is urgency, and there is scale is needed. So we need to accelerate the pace and lead the way, be bolder, and go into really open the way for more impactful projects.
Thank you. Thank you, ladies. I think, I hope the audience heard how both exciting and difficult the challenge was in this very limited time. Thank you for your expertise, and
Thank you, Imen.
to the next panel. Thank you.